Thank you, Madam Speaker. I beg to move the following motion standing in my name. Be it resolved that this House adopts the report of the Standing Finance Committee of the House of Representatives for the second session 2021-2022, 12th Parliament on the consideration of proposals for the variation of appropriation for the fiscal year 2021. Madam Speaker, this is a routine matter that we are about. It is standard practice, and it is in fact a requirement of the law that the fiscal accounts be closed on or before the 31st of January in the year following the close of a financial year on September 30th. We did not have this process last year because there were no variations that required approval, and therefore the accounts for fiscal 2020 were closed without need for resort to the procedure that we are about today. However, Madam Speaker, we had some variations during the year to deal with a number of matters. These matters have been addressed in the Standing Finance Committee that we had on Friday, and we are seeking approval following the approval of the Standing Finance Committee, which met, as I said, on Friday, the 21st of January, and the committee agreed to a variation of the 2021 appropriation and to the write-off of losses approved for fiscal 2020. The variation of appropriation of resources in the sum of $574,889,840 was necessary to bring to account expenditure in the same amount which was funded by advances from Treasury deposits in fiscal 2021. The total increase, as I indicated just now, in heads of expenditure being proposed is $574,889,840. The total decrease is the exact same amount, $574,889,840. It produces a nil net effect. There's no change to the appropriation for fiscal 2021. The details of the proposed changes were circulated to all members in the Standing Finance Committee and discussed at its meeting on Friday last. Clarification was sought with respect to some of the proposed changes to the appropriation for fiscal 2021. I received a list of questions and I assigned the staff in the Ministry of Finance to produce answers to the questions asked by honorable members. If just give me 1 second, Madam Speaker, I will pull up some of the questions that were asked in due course. I anticipate that during the course of this debate, the various proposals contained with the bill with respect to the Ministry of Public Administration, the Ministry of Finance, the Ministry of Social Development, and so on, will be dealt with by other members who have line responsibility for these matters. Let me elaborate a little further on the main reasons why the additional funding is being proposed. And just for the record, let me just indicate that I was asked questions about the government assistance for tuition expenses, specifically how many persons access gate funding in fiscal 2020, and about the Trinidad and Tobago Mortgage Finance Company, how many persons were not able to access the TTMF services in fiscal 21 due to the company's reduced request for disbursements. Strange question, but we try our best to answer. With respect to the Urban Development Corporation of Trinidad and Tobago, which financial institution was used to refinance the $230 million loan? What was the effect of refinancing the loan? And similarly, with Evolving Technologies, ETech, what was the effect of refinancing the loan, and what specific project was the $160 million loan to ETech supposed to finance? So I expect to get those answers from my permanent secretary if I have not received them already, and the responses will be circulated to members. Now let's go to the actual amount itself, the $574 million. And firstly, under Head 03, Judiciary, an increase of $35,195,944 is being sought to retire an advance made from Treasury deposits that facilitated payments to vendors who provided security and telephone services, as well as office accommodation to the judiciary. Under Head 17, the Personnel Department, an increase of $8,640,671 is being sought to retire an advance made from Treasury deposits to facilitate payment for the rental and lease of office accommodation, and this would be all of the office accommodation that is occupied by the CPO, the renewal of software licenses, and to vendors who provided consultancy and janitorial services. Under Head 78, Ministry of Social Development and Family Services, an increase of $531,053,225 is being sought to retire an advance from Treasury deposits that enable the encashment of checks in respect of senior citizens, public assistance, and disability grants. It should be noted that in accordance with Section 17(1)(b) of the Exchequer and Audit Act, Chapter 6901, advances made from Treasury deposits are recoverable within 12 months after the close of the financial year in which the advances are made. This is another reason why we are here today, to resolve that matter. Let me now look at the specific reduction in the allocation for the Ministry of Finance, Head 18, from whence the money came to support the Judiciary, the Personnel Department, and the Ministry of Social Development. Upon a final review of the 2021 accounts, savings were identified by the Ministry in the original allocation, where the amounts disbursed were less than the funding allocated in fiscal 2021. The details of these sub-items have already been circulated to members and discussed at the Standing Finance Committee. The Standing Finance Committee also agreed to the write-off of losses in a total sum of $8,218,653.91 for fiscal 2020, the previous year. And the reason why we are doing that this year is that there was no opportunity last year because there was no requirement for a variation of appropriation bill and debate of this nature. Those write-offs are for the Auditor General, Head 02, a total of $1,498,666.01 in respect of audit fees deemed uncollectible. These audit fees were deemed uncollectible because these are fees charged by the Auditor General to state enterprises. So it's really left pocket to right pocket. Head 26, Ministry of Education. Yes.
Might I remind you of Standing Order 48.1? In terms of while we are looking at the committee report, remember it's with respect to a certain circumscribed matter, which is for the variation of the appropriation.
Oh, certainly, Madam.
Please.
I will move immediately away from the write-off of losses. Let me move now to the fiscal output, because we've had a lengthy discourse at the Standing Finance Committee on the rationale for the movement of the funds and the purposes for which the funds were used by the respective ministries during fiscal 2021. And might I say that every year when we do the budget, we make our best effort to make the best possible estimate of what expenditure will be and what revenue will be and what the requirements of each ministry or department will be. There are certain ministries and departments that we have to keep a very close eye on, social development in particular, because of the amount of money that is spent in that ministry. I don't think members understand the vast sums of money that are spent in the Ministry of Social Development and Family Services. And the majority of this money, the vast majority of it, is spent providing what we call in Trinidad and Tobago a social safety net. So we have an unfunded pension plan for senior citizens. This is not a contributory plan. And senior citizens are entitled as of right, when they get to the age of 65, to receive a senior citizen's pension once they meet certain criteria in terms of their income levels. But they do not contribute in a specific way, unlike the national insurance pension, for example, which is funded by contributions both from employer and employees and other private pension plans. The senior citizens pension plan is an unfunded pension plan, and it is provided as a benefit to citizens of Trinidad and Tobago who have reached the age of 65 and are in certain financial circumstances where their income is such that they qualify for the senior citizens pension. You will have heard the minister indicate at the last meeting that the number of persons who receive senior citizens pension is now in excess of 100,000. I believe I heard the minister say 105,000 or 108,000. It's somewhere in that vicinity. But it's over $100,000. And if one looks at the payout and the numbers, one easily sees that the government of Trinidad and Tobago spends $4 billion every year on payment of senior citizens' pension. And this is a number that is increasing all the time. And therefore, we in finance are keeping a close eye on this expenditure to make sure that only those persons who are eligible to receive the pension and persons who may have passed away, may have migrated, may have left the country, or for one other reason no longer qualify for old age pension or senior citizens pension, as it is now called, are still on the list. So it is something that we have to keep our close eyes on because it keeps going up. And at the beginning of the year, we would make a particular allocation to the Ministry of Social Development, and during the year we would monitor, and during 2021 it became clear that we had to supplement the appropriation and vary the appropriation for the Ministry of Social Development, not just for senior citizens pension, but also for the other grants, which again we are keeping a close eye on, such as the conditional cash transfer, which is colloquially called the food card. That's the official name for the food card, conditional cash transfers. We have to keep a close eye on that because the number of beneficiaries, particularly during COVID, has been on the increase. These are significant sums of money, hundreds of millions of dollars we are talking about. In addition, the numbers with respect to disability grants, we have to keep an eye on that as well. Because when you add it all up, you're talking about $5 billion at least that is spent by the government of Trinidad and Tobago every single year on what is called the social safety net. And therefore, even though we had anticipated there would be some streamlining. There was. I want to commend the Minister of Social Development for all of her efforts in rooting out inefficiency, potential fraud, and other areas of wastage within the social safety net system. We still were required at the end of the year to provide additional funds to the Ministry of Social Development and Family Services. Similarly, with respect to the judiciary has been on a development program within the last several years, building out new facilities, new systems, increasing the number of judicial officers and their support staff, and so on. And again, we had made an estimate at the beginning of the year as to what the judiciary would require, and again, it became apparent during the year that we would have to supplement the judiciary. Similarly, with the personnel division, we had made an estimate of what we needed to spend, and again, it became obvious during the year, especially because of the fact that the personnel division is doing a very comprehensive job evaluation exercise, more than one actually, for the Ministry of Finance. Very important job evaluation exercise within the public service, and the personnel department also manages the public service health plans, both for monthly paid and for daily paid workers. It became obvious that we would need to supplement the personnel department in terms of additional funds. So those are the explanations for the variation of appropriation by reducing the Ministry of Finance in areas where funds were not required by September 30th, and being able to appropriate those funds or to send those funds by way of treasury deposits to those three areas. But let me talk now briefly on the fiscal outturn for 2021, because we are closing the accounts for 2021, and I would have reported some time ago on the outcome of fiscal 2021. I would have done that some months ago, and what I would have done at that time is use the best available information that I had in terms of what the outturn was. When the budget was originally presented, we had indicated a particular deficit of some $8 billion. At the end of the year, because of reduction in revenues for all sorts of reasons, production challenges in the energy sector, the effects of COVID on the national economy and so on, revenue was less than expected, and the deficit increased by some $5 billion. I can tell you now that whereas I reported in October that we anticipated a deficit of $13.7 billion for 21, the actual deficit is $13.0 billion. And there were all sorts of reasons for this, but I don't want to get into too much detail, yes, Madam Minister. Speaker.
I rise just as where you've ended. In terms of, to remind you of Standing Order 88, we are here to adopt the report, and it's very specific. So while I think it's important, we might want to hear the matter. I'd like us to comply with the Standing Order.
I am about to conclude, Madam Speaker. In anticipation, I thank you very much for rising to remind me and remind everybody else that all we are talking about today is a variation of appropriation in a sum of $574,889,840, taking the funds from the Ministry of Finance from several areas already articulated at the Standing Finance Committee and sending those funds to three areas: the Judiciary, the Personnel Department, and the Ministry of Social Development and Family Services, for the reasons well articulated at the Standing Finance Committee and briefly summarized by me just now. I beg to move.